Hello everyone and welcome to another video. Today we're going to talk about Orezone Gold, their Q2 report which came out a couple of days ago. So we're just going to make a quick rundown about it. Orezone Gold has two main projects. The one in Burkina Faso, which has 4.5 million ounces of gold in resources, in measured and indicated. And in reserve it has 2.4 million ounces of gold. And they are projecting that it will produce between 150 and 180,000 ounces of gold in 2026. And that's in West Africa. Their newest operation though is Casa Berardi, which is in Quebec, Canada. That project has roughly 2.3 million ounces of gold in measured and indicated, 1.2 million ounces of gold in reserves, and that is obviously also producing. And as you can see here, this is from Q2. As you can see here, Bombaro, the West African mine, in Q1 it produced 37,563 ounces of gold, and in Q2 it produced 38,063 ounces of gold, which is very nice. It's improving. And the Canadian project though went from producing 1,226 ounces of gold in Q1 to when in Q2 that same project produced 20,503 ounces of gold. So that's very nice though, that it is improving though. And obviously, as you can see here, the all-in sustaining cost did go up though. Apparently there were several reasons. It was the integration of a higher cost mine, the Canadian one, so higher unit cost, and apparently explosive supply shortage, and apparently delay in high grade benches, as you can see here with the text. Bombaro is expected to deliver stronger second half of the year due to access to higher grade rock ore, which is very nice, and obviously due to record gold prices equals higher government royalties on the Bombaro project. So that's somewhat part of the reason for higher, obviously, fuel costs as well due to diesel, because they have diesel generators and they transport the gold and so forth. So obviously higher diesel prices equals higher costs, obviously. So that's apparently one of the reasons. But anyway, regardless of the all-in sustaining cost, they've been massively... Just look how much money they are making though. Revenue, Q2, $271 million. Compared to last year, $94 million. They are improving earnings per share. They are improving. It's very nice though. We've mentioned this quite a lot during 2025 and so forth. But oh, look at that. Free cash flow, $80 million. These companies are very nice. And they are making so much money from these elevated gold prices. Another thing that's also very interesting though is that they are obviously advancing to increase production at the Bombaro project in that 2A hard rock expansion that is scheduled to start commissioning at October 2026, which is not too far away. Another thing that's also very interesting though is that they are increasing the resource at the Casa Berardi, trying to increase the resource. But also there's another project they have which is called Heva Hosco development project, which they are advancing to PEA, which is this one. You can see I've outlined it. That's the Casa Berardi that's already producing. But Heva Hosco, which is another project they have, which has 1.2 million ounces of gold in measured and indicated, and 700,000 ounces in inferred. And they are expecting a PEA by Q3 this year. So project Heva Hosco's feasibility study, which was in 2012, which they projected would have a 14-year mine life, produce a little bit over 100,000 ounces. And this was gold price assumption at $1,300 gold. We are almost at $4,500 now. So things have changed quite a lot in 14 years. Maybe in the future they would have 3 projects producing. Imagine that. Because most of the reason apparently that this company, as you can see here, have been trading cheaper than a lot of other companies is due to their main asset being in West Africa. And West Africa has been having a conflict throughout the years. Things seem a little bit more stable now than it used to be, in comparison towards other companies in similar production bracket. And as you can see there, Orezone Gold is producing quite a lot of gold. It's a 4th place out of these mentioned. But look at price to NAV. It's the cheapest one out of all of these. And EV to EBITDA, it's the cheapest out of all of these. And the market cap out of all of these, literally almost the cheapest out of all of these. So it seems very attractive even with the share price increase. It seems very attractive, and now with multiple projects. I really like it though. So this company seems to have a very nice future though, in my opinion. Obviously the all-in sustaining costs seem to be both something that they couldn't prevent and something that's temporary, in my opinion. But it seems very interesting though. I really like it, and I hope you have thoroughly enjoyed this video. Like and subscribe. Have a wonderful day. Peace!